As of 11:25 a.m. Eastern Time on October 3, 2025, Rezolve AI PLC, trading under the ticker RZLV on the Nasdaq, is priced at approximately $7.27, marking a significant intraday surge of over 15.8%. This kind of volatile price action is precisely what draws traders in, creating a powerful expectation of rapid gains. Many are looking at this and seeing a classic high-growth AI stock, perhaps the next competitor to NVIDIA stock in the specialized retail sector. The common belief is that Rezolve AI is on a straightforward upward trajectory, fueled by the insatiable appetite for artificial intelligence solutions. However, the reality of the situation is far more complex and layered than this surface-level excitement suggests. While the daily gain is impressive, it comes on the heels of a period of intense fluctuation, and the sheer volume, currently over 35 million shares traded, points to something more than just uniform bullish sentiment. It indicates a battlefield between high-conviction buyers and equally determined short sellers, a dynamic that casual investors browsing on platforms like Robinhood or SoFi might easily overlook. The expectation is a smooth ride up. The reality is a high-stakes tug-of-war that could snap in either direction without warning. To truly understand the forces at play, we need to move beyond the single-day chart. The recent news cycle for Rezolve has been a whirlwind. Just a few days ago, the company announced it was raising its 2025 guidance to $150 million annual recurring revenue, RRR run rate, and initiating 2026 guidance for a staggering $500 million RRR exit rate. This news was the primary catalyst for the current rally, shattering previous analyst forecasts and creating a powerful narrative of exponential growth. This is the story that has captured the market's imagination, the expectation that Rezolve is not just meeting, but dramatically exceeding its growth targets. It fuels the buying pressure you see today. Yet digging deeper into the reality of their situation, we find the company also recently had to issue a clarification regarding an SEC filing and publicly push back against a short seller report from Fuzzy Panda Research, which accused the company of misrepresenting its capabilities and market position. This is a critical piece of the puzzle. The market is not just reacting to good news, it's also reacting to the company's defense against serious accusations. This creates a fascinating tension. On one hand, you have institutional investors, potentially using sophisticated platforms like interactive brokers, piling in on the basis of the aggressive new guidance. On the other, you have a segment of the market that remains highly skeptical, fueling a high short interest and borrowing fees that have been consistently elevated. This isn't just a growth story, it's a contested narrative, and the stock's volatility is the direct result of this conflict. Retail investors looking for a straightforward play similar to the long-term growth of Apple stock need to recognize that RZLV is currently a very different kind of beast, one defined by both immense potential and significant controversy. Let's break down the technicals and the institutional sentiment. The stock has been on a wild ride, with a 52-week range stretching from a low of about $1.07 to a high near $8.45. Today's move is pushing it back towards the upper end of that range. This demonstrates that the stock has the capacity for massive swings. A self-investing individual using a platform like Schwab Intelligent Portfolios, which typically emphasizes diversified long-term holdings, might find this level of volatility unsettling. It's more suited for active traders who can stomach the risk. Looking at institutional ownership, we see major players like BlackRock and Vanguard establishing positions. This is often seen as a vote of confidence, the smart money validating the company's prospects. That's the expectation. The reality, however, is that while these institutions do hold shares, the overall institutional ownership percentage is still relatively low for a company of its market cap. Furthermore, the filings show that many of these positions were initiated recently, meaning these firms are still building their thesis, not necessarily giving a full-throated long-term endorsement. Their entry adds to the trading volume and liquidity, but it doesn't erase the underlying risks highlighted by the short sellers. This is where an individual investor using a full-service option like Fidelity Wealth Management might get a more nuanced picture than someone simply trading on the SoFi Invest app. The presence of big names is bullish, but the context of that ownership is what truly matters. So what does Rezolve AI actually do? Stripping away the market noise, the company operates at the intersection of artificial intelligence and e-commerce. Its core product is Brain Commerce, a platform powered by a proprietary large language model designed to fundamentally change the online shopping experience. The expectation is that this is just another chatbot or a slightly better search bar. But the reality is that their technology aims to be far more integrated. It's designed to handle complex, conversational queries, improve product discovery, increase average order values, and reduce the number of abandoned shopping carts. For retailers, these are mission-critical metrics. A fractional improvement in conversion rates can translate into millions in revenue. The business model is primarily a cloud-based service, selling its AI solutions to retailers, brands, and manufacturers. They aim to become the underlying brain that powers more intuitive and effective digital commerce. This is a massive addressable market, which is why the growth forecasts are so ambitious. However, they are not alone. They operate in a fiercely competitive space against tech giants and specialized startups, all vying for the same prize. The company's success is contingent not just on its technology being good, but on its ability to outmaneuver and outperform a host of well-funded competitors. This is a crucial reality check against the expectation that a good idea automatically translates to market dominance. The path from innovative tech to widespread adoption is fraught with challenges, a lesson known from watching countless tech stocks over the years. Looking forward, the future outlook for Rezolve AI presents a fascinating dichotomy of potential scenarios, perfectly encapsulating the theme of expectation versus reality. The bullish expectation is clear. The company continues to smash its revenue targets, the short seller arguments fade into irrelevance, and the stock re-rates significantly higher as it captures a meaningful slice of the e-commerce AI market. In this scenario, today's price of around $7.27 will look like a bargain in hindsight. Catalysts for this outlook include major new client acquisitions, validation of their technology by respected third parties, and continued strength in their financial reporting that proves the growth is both real and sustainable. The market wants to believe this narrative, much like it once latched on to the incredible growth stories of stocks like Tesla stock. The allure of being in on the ground floor of a major technological shift is powerful. Do you think Rezolve AI has the technology to truly become a dominant force in e-commerce? Comment below with your take on their long-term potential. However, we must ground this optimism in the reality of the risks. The bearish scenario is that the short sellers' concerns prove to have merit. Perhaps the growth, while real, is not as sustainable or profitable as the headline numbers suggest. The high trading volume could reverse, and if the company fails to meet its lofty guidance in a future quarter, the punishment from the market would likely be severe. The competitive landscape is another major risk. A larger, more established player could develop a competing technology, or a pricing war could erode margins. For those considering an investment, the choice is not simple. It requires a careful weighing of these competing narratives. It's less about finding a safe bet and more about making a calculated decision on a high-risk, high-reward proposition. This is not a stock for an investor who wants to simply park their funds in an individual brokerage account and check on it once a year. It demands active monitoring and an understanding of the forces shaping both the industry and the specific controversies surrounding the company. Platforms like Interactive Brokers offer the tools for this kind of deep analysis, but the interpretation of that data is what separates a successful trade from a cautionary tale. In summary, the story of Rezolve AI PLC is a masterclass in the stock market's constant battle between expectation and reality. The expectation, fueled by a massive intraday rally and aggressive company guidance, is of a seamless journey to becoming a titan in the AI-powered e-commerce space. The reality is a far more volatile and complex picture, marked by fierce debate between bulls and bears, a controversial news cycle, and the immense pressure of operating in a hyper-competitive industry. The stock's current price movement is a direct reflection of this tension. It embodies both the market's profound desire for the next great growth story and its deep-seated skepticism born from past tech bubbles. For investors, the path forward requires looking past simply the allure of a stock chart rocketing upward and engaging with the deeper, more challenging questions about the company's technology, its market position, and its ability to execute on its incredibly ambitious promises. The ultimate outcome for RZLV remains unwritten,
but its journey will undoubtedly be a case study in how narratives are built, challenged, and ultimately resolved in the crucible of the public markets.